Should you be worried about not being able to keep up with the rising prices, even if you have sufficient funds in your savings bank account? Now assume you have rupees 1000 in your savings account. Your savings account earns 5% interest per annum. As a result, after a year, you will have rupees 1050 in your account. Assume that the rate of inflation is 10% during this time period. This means that your favorite product, which is priced at rupees 1000 today, will increase to rupees 1100 next year. Even if your investment grows by 5%, commodity prices will rise by 10%, resulting in a negative return on investment. Now this sums up the significance of investing and maintaining a diversified portfolio. Investing can be risky, but with the right tools, you can get the best results. Remember that you do not have to invest all of your money, and you do not even have to invest all of your money in stocks. However, if you invest your long-term savings somewhere other than your bank account, you can earn higher returns. Consult with us for more such advice and get the best returns on your investment.